What's up, traders? Today I have a highly requested video where I'll be discussing HIMS stock and what I think about it and how I plan on making money off of the stock. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader and I bring in multiple six figures a year from the stock market, and I use the money I make from the stock market in order to pay for my entire lifestyle. Now, first things first, make sure you smash that like button so we can get this video out to everybody who wants to see it, and subscribe to the channel while you're at it. And do remember that I am not a financial advisor and this is not financial advice. All trading comes with risk. I'm just showing you how I built wealth over time. Now, I'll be honest, when HIMS stock started getting all this hype and I looked into it, and the first thing that I saw was that it was a telehealth company, the first thing that came to mind was Teladoc, ticker symbol TDOC. Now, for any of my traders who've been around for a while and had the privilege of trading during 2020, then we all seen the rise and the fall of Teladoc Health. Now, during 2020, of course, the pandemic was happening, and out of precaution for health reasons, everybody was trying to do things from home. And so because of that, Teladoc was all the hype at that time because you could see your doctor and still receive your health services from the comforts of your home while not being at risk of going out and catching, any germs. But during that time, Teladoc was hyped up to be the next big thing, and that millionaires were going to be made from their stock. And if we take a look here, we can see that clearly didn't happen. So taking a look at the chart, we can see it got as low as $55 in September of 2019. And then throughout 2020, it had a huge run up and got as high as $308 in February of 2021. All right. And since then, it's literally just been going down. And today it is currently a $7.46 stock. And that's just disgusting. But if any of those traders / investors were to look at the stock's fundamentals while it was trading up here, then you probably would have shied away from it, because Teladoc then they were losing money, and Teladoc now they are losing money. And who the heck wants to invest into a company that is constantly losing money? And so when I seen HIMS was partly a telehealth company, I thought, oh shoot, another Teladoc. However, when I started to look into it, I thought, we may have something here. So I did a comparison of the two companies. I secondly did a bunch of research and gathered my bull cases for this company and my bear case for this company. And thirdly, I decided on the best way to trade this stock in order to make money now. Now, before we get started, if you do know anybody who would like to generate income off the cash that they already have, then tell them about the Trade to Freedom community. The link is in the description below. They'll get my exact trades as soon as I enter them. They'll get my full options course that shows you my entire framework for trading options. Thirdly, they'll have full access to ask me questions at any given time. And lastly, they'll be within a community of other traders who all have the exact same goal as them. So if you do know anybody who would like to join, we have strategies all the way from 0D for our day traders, all the way up to monthly income for our individuals who are a little bit more busy. So links in the description below, but let's get down to business. All right, so here we have a little table that I made comparing HIMS to Teladoc. So first off, HIMS model is a direct-to-consumer subscription. Now that word intrigued me already because the word subscription means it's recurring. And so that already piqued my interest because I love companies that have subscriptions. And Teladoc is a business to business and sometimes business to consumer via insurers. All right, so Teladoc mainly goes through your insurance. Now, revenue mix. I was intrigued to find out that about 90% of HIMS revenue is the recurring revenue from their subscriptions. And I thought, well, this is getting even better. While Teladoc has a mixture of revenue sources. Then most importantly, for any business, because it's not how much you make, it's about how much you keep. Profitability. HIMS is already a profitable company, I believe as of last year, but we'll go over those numbers shortly. And Teladoc, years later, is still unprofitable. And that is just unfortunate. All right, so growth. Year over year, HIMS has grown about 40 to 50% year over year, while Teladoc is actually losing money year over year. And then HIMS brand focuses mainly on millennials and the younger generation and the things that they need for their lifestyle, while Teladoc Health is focused on enterprise. And HIMS is very healthy into the whole weight loss journey, which is big business right now, while Teladoc is not so much. All right, so that is what I needed to do for myself in order to even look at this company, just to get out of that Teladoc mentality when I heard the word telehealth. But now that we have that covered, now let's look at my bullish case for this company. So first off, they have amazing rapid revenue growth, and they did 46% year over year for the first quarter of 2025. And they posted consistent double-digit revenue growth, which is mainly driven by their subscriptions, which I love. Secondly, like I said, they're already profitable, and they have pretty high gross margins, although they do spend a ton of money on advertising, which ends up impacting their net margins. However, we will go over that shortly, but they are a profitable company, which differentiates them from the other companies that we just looked at. Thirdly, 90% plus of their recurring revenue comes from subscriptions. The reason I like subscriptions so much is it creates a predictability to your income. And when it comes to investing, every investment is the present value of all future cash flow. And so when we're determining what we want to pay for this stock today, we need to be able to reasonably predict what we think they'll do in the future, and then take that number and determine how much those future profits are worth in today's dollars. And when you have a recurring revenue stream like they do, and over 90% of the revenue is recurring revenue, that makes it a lot easier to predict. And then fourthly, they are expanding the verticals. Previously, they just focused on hair loss and men's sexual health, but now they're getting into GLP-1s and mental health and dermatology. So now they have a bigger basket to choose from. And they were actually one of the first movers when it came to GLP-1s, such as Ozempic. And so this could be a major future revenue driver. And a lot of the products that they sell that are designed to help you are usually products that you have to keep taking in order for the benefits to remain. So for an example, with Ozempic, studies have shown that once you stop taking it, you typically gain all that weight back and sometimes even more. Or for their men's sexual health products, if a gentleman is having issues with that, he's not going to stop buying the product that fixes that issue for him. And so because they sell products that people feel that they need, once you become a customer, the likelihood that you're not a customer any longer in the future is probably very slim. So as far as the business aspect of that, I love it. And then lastly, they have a strong brand with loyal Gen Z and millennial users. Now, one thing I know about HIMS is they will spend some money on advertising, and that advertising has worked. So those are my bullish cases for HIMS. But now let's take a look at my bearish cases. All right, first things first, it's not cheap, and it actually trades at a pretty high multiple compared to its peers. And so when you are priced to perfection like this, if there is ever a hint for any slowdown, the stock is going to get hammered. All right, so I don't really like that rich valuation, but it has gone up quite considerably recently, so that's what happens. And they nearly spend about 40% of the revenue that they bring in on the advertising. And so that is quite considerable. And then thirdly, they have a low moat, which basically just means their business model is very easy to replicate. All right, most of their products are not products that they invented themselves. They are just acting like the middleman, which it's not difficult for another business to be the middleman as well. All right, so they have a low moat. Then fourth, are regulatory risk. Of course, they are dealing with medications. And anytime you're dealing with medication, then the government can change one thing and take away part of your revenue instantly. And lastly, they do have fierce competition. Like I said, they have a low moat. And so their competitors can be Roe, Amazon, CVS, etc. And I'm always a little weary when Amazon can be your competitor, because we all know Amazon has the power and the resources to make almost any small business irrelevant. And so after my research, I did decide that there may be a good chance that we can make some money off of HIMS, but Teladoc, they'll leave you looking like this brother right here. Dang, look, he has the wallet open, not a single dollar bill in there. But anyway, let's dig a little deeper. All right, so now we're looking at the detailed financials here, and we can see from December 2020, they went from zero revenue, and the year ending December 2024, they went to $1.4 billion in revenue. So that is obviously extreme growth. And we can see from 2020 to 2023, they lost money as far as net income. And then in the year ending 2024 was their first year having positive net income at $126 million. So they are obviously doing something right, and they are continuing to grow their business. But what I like even better is when I look down at the free cash flow, we can see while looking at their net cash flow, they've been positive for the last 2 years. So I definitely love that, because cash flow is much more important than net income. And the reason for that is net income can kind of be manipulated while using different tax accounting rules. And so net income can look smaller or greater depending on depreciation, amortization, whatever tax write-offs that you take. However, cash flow is simply the cash in versus the cash out. And it doesn't take all those different accounting rules into practice. And so I do absolutely love what I see there. Now, looking at analyst targets, what I do want to point out is that 2 to 3 months ago, the analysts collectively had it as a moderate buy. And then over the last month, they went to a hold. Now, that's probably in part due to the rising stock price. So we'll take that into account. However, for their price targets, they have a high of $85, a mean target of $45, and then someone has it as a low target of $25. But when I look at those target prices, I typically put more focus on the mean, which is currently at $45, and HIMS is trading for $55 as we speak. So it is currently over their mean target price. But now let's go ahead and take a look at the chart. So we can see HIMS stock has literally been quite the roller coaster. It was in the $20 to $30 range pretty much all of January, and then it skyrocketed up to $72 by February 19th, and then it tanked from $72 all the way down to $23 in the span of a month and a half, and now it has come back up. Now, I was watching all the hype and the stock price during this time period here, and I knew that it was going to come back. And here's the reason I knew it. It's typically any time that a stock goes parabolic like this, and it has not seen those levels before, it typically always comes back to whatever price point that it was before the parabolic move. Because since all of the investors and traders who were in that stock have never seen those numbers before, they go, oh shoot, let me get out of this in case this never happens again. And so every time I see something like this, I know that it is coming back down. It has done the same thing recently. However, this time around, the stock has seen these numbers before. And so that is the difference. And so that is why you kind of see somewhat of a consolidation right here after this big move upwards, is because we've recently seen those numbers. And so the stockholders have a different sentiment this time around. Now, the question is, how would I trade this stock in order to make money? Well, I'll tell you what I'm not going to do at this moment. I'm definitely not going to buy Leap's contracts on this because it is way too close to the all-time high. So we have the high over here at $72, and we've had this recent run up. So Leaps are a no-go for me. However, since I would like to make some money off of the stock and I would like a nice margin of error, and since the premiums are so nice for this stock, I'm going to sell puts in order to potentially buy the shares at a much cheaper price at a later date. And whether I'm forced to buy the shares or not, I'll get paid to wait around. Okay, so let's look at our data points. First thing I want to look at are the Bollinger Bands here, which are these black lines. And I want to focus on the bottom Bollinger Band line, which is currently $52.43. And so as of right now, it's expected to stay above $52.43 according to the Bollinger Band. However, now let's go take a look at the expected move. And so next thing I need to do is select my expiration date. And I think we're going to do some monthly income. So let me come to this date that is exactly 30 days out. And the options market currently expects a $9.11 move, which will be about a 16.72% move, which will have us at a lower price of $45.39. All right, so that is lower than what the Bollinger Band said. And I typically like to go with the more conservative of the two numbers. So I will go with this. And it also matches the $45 mark that the analysts had put on this stock as a mean price. And so that is good to me. So we will take this over to Thinkorswim with that $45 mark in mind. But if you would like access to this data, the link to the website is in the description below. And you can get a free 30 days when you use the link below in the description. So go ahead, check it out, get your free 30 days and come play with this data. I use it every single day in order to find the best trades. But let's head on over to Thinkorswim. All right, so now we are in the options chain for HIMS, and we want to select the exact same date we were just looking at, which was 30 days out from now. So I'll go ahead and select that date. And now we want to come over to the put side. And remember, we were looking at a strike of $45. Now, I like to stay below a delta of 0.20, and currently this strike is at a delta of 0.15. So that fits the criteria quite perfectly. Now, if you want a higher rate of return, you can absolutely go up to a higher strike price. However, with me, I am absolutely fine with being conservative and getting paid to wait around while the stock hopefully comes down a little bit lower so I can get the stock at a cheaper price. And with the premiums being anywhere between $1.01 to $1.25, I will get near a 2 to 3% return for this very conservative strike price. And that's one thing I am not greedy. I just take what the data gives me. All right, but if we go ahead and sell this put at $45 on HIMS, we are agreeing to buy the shares of the stock if the stock drops from $55 down to $45 by our expiration date. However, if it stays above our $45 mark, then we just keep that money we were paid and we go about our day, and we can continue to do that trade over and over and over and over again. However, if the stock price does drop below our $45 mark, then we have agreed to buy the shares at $45. Okay, and in that situation, you still keep the money that you received regardless, but now you just need to purchase the shares, and every contract is worth 100 shares, so keep that in mind. All right, but if we want to go ahead and make the trade, we'll go ahead and select this, and we can see we are selling, and then here you can place however many contracts that you would like. Just for the examples of this video, I'm going to do 5 contracts, and we have our date selected for 30 days out with our strike price of $45, and it is a put. And we can see at the mid price currently, we'll get about $124. So we'll go ahead and put it at the mid price. And when you're ready to place a trade, go ahead and hit review and place a trade. However, let's take a look at the P&L chart. All right, this is perfect. So if we look at the number there at the top left, we can see that if HIMS stock price stays exactly where it's at by expiration, we just keep the $620 we received and we go about our day. If the stock price goes up, we keep the $620. Stock price goes down some, we keep the $620. However, if the stock price were to go below our $45 mark, we will start to make less and less money on the contract. And then our break-even point is right here around $43-ish. Okay. And then if the stock price were to go down even further than that, then the contract becomes less and less and less. However, we don't care about that because we were fine with purchasing the shares of HIMS stock at the mark that we set by the expiration date. Okay, and that's the way that I think about selling puts is I don't care either way. If the stock price goes up, I got paid to wait. If the stock price goes down, I still got paid to wait. However, now I get to purchase shares of a stock that I actually like at the price that I actually set. Okay, so that is the perfect way to go about it mentally. However, if you decided that you do want to use a strategy like this and you do not want to buy the shares, then what you could do is just set a 3x stop loss. All right, so we received $1.24 of premium for selling these puts. Well, then you could just set a stop loss at 3 times that premium that you received. And normally you can still be successful doing it that way as well. However, I love getting a stock at a discount and getting paid to buy a stock at a discount. To me, that's the win-win. But ladies and gentlemen, I hope you learned a ton. I hope that you have a blessed day. And like I said, if you would like to join the Trader Freedom community, the link is in the description below. But other than that, do make sure you like this video. Do make sure you subscribe. And I will see you guys on the next one. Peace.